Sage reporting for Kalkine Media. Thank you for joining us. Your time is valued. Please stay watching for our trending news topic from the UK. Why Bank of England is planning tougher capital rules than the EU. The banks in the United Kingdom would face a set of tougher rules with a new proposal from the Bank of England, which is considered as an important breakaway from the European Union laws. The Prudential Regulation Authority, or PRA, has ruled against a capital benefit for banks for their investments in software and technology. Last year, the EU had allowed its banks to account for investments in software as part of their core capital levels, making a scathing statement on the EU's policy. Bank of England Governor Andrew Bailey said that the policy did not give a correct estimation of a bank's ability to absorb losses. So is EU's policy better? The decision comes at the backdrop of the possibility that the EU would not provide an equivalent status to British financial services firms. The EU's policy to count software investment as core capital would enable lenders in Europe to make investments in information technology, allow them to compete with financial technology firms and big US lenders. However, the Bank of England's decision would make the rules tougher and limit the amount that banks can pay as dividend. This, coupled with capping payouts to shareholders, would protect banks' ability to continue with their lending activities and minimise the losses on loans post-COVID-19. The EU's policy is expected to not only safeguard lenders from the competition from financial technology companies that are getting into the lending space, but might also help in putting European lenders at par with US lenders who benefit similarly from such capital provisions. The Brexit and regulatory changes. So it is not just financial services that are going through a tumultuous phase of regulatory changes. Britain's exit from the EU has brought along with it a host of complications in terms of rules and regulations and a gamut of services. As part of the Brexit, the UK does not any longer belong to the customs union. This exposes the UK businesses to a host of new paperwork and documentation. Businesses have seen their goods being held up in border areas due to lack of clearances. Thank you for your time. Hopefully this has been informative for you. Sage here for Kalkine Media.